The top half of the gray area, we get this information from the work together. The bottom half in the bold, all that information is going to come from your worksheet from 15.1. So we're going to get the bottom information from. So we'll start here. Now you prepare your income statement. January 1, Interstate Tires. I won't read this to you, as I know everybody can read. But we've got 100,000 shares of stock at $1 per share, and then we had 10,000 more shares in the year. So we're going to start with our heading. So just like on the opposite page. So we've got Interstate Tires. Statement of stockholders' equity, year ended December 31st. We'll put 2017. So we've got that up here so far. So we'll start labeling our lines. We got capital stock for this section. So the next line down, we're going to put our share value. So in the description, we get $1 per share. So $1 par value. Switch to pen so it shows up better. And then January 1st, 2017. This description says we had 100,000 shares. So on this middle column, we're going to take our shares issued, multiply that times the value. So it makes it pretty easy here. They're only $1 a share. So we've got 100,000. So our value is $100,000 here in the middle column. And then our next line down, we're going to put in how many shares are issued during the current year. So issued during current year. And here in the description said we had 10,000 additional shares. So we'll put 10,000 here. Then another easy part, 10,000 times what our share value is, $1. So $10,000. Then we'll go ahead and draw a line under that. because we're going to add those together. So then our next line down, we're going to show the balance of the shares of December 31st, 2017, and our total shares. So at the end of the year, we have 110,000 shares out. So either way, you can take 110,000 times the $1, and they're both going to equal the same, or add these two up for $110,000. So there's the value of our shares that are out to the shareholders. So now we'll start down here on the retained earnings. Our balance on January 1st, 2017. And this is when we're going to go to our worksheet. So, if you remember on the worksheet, this section, the first two big sections of the worksheet, those are the beginning of the year and adjustments during the year, and this is our ending of the year. So this is the December 31st section. This is the beginning of the year, January 1st section. So our retained earnings as of January 1st, $46,599.48. So we're just going to put that, just like it shows, going to put that in the middle column. So $46,599.48 for our balance on January 1st. And our next line down is going to get our net income after federal taxes. And that, we'll get that off of here too. Okay, so we've got on the back side of our worksheet, line 51, net income after federal taxes. We got $69,907.35. So I'll set that up here so I can see it. That's going to go in that first column. Then our next line down, less dividends declared during 2017. So go back to our worksheet. We've got our dividends line at the very top. $8,800. So we'll put that here. We'll draw a little line underneath that. So less dividends declared, so that means we're going to subtract the dividends from the net income. So let's see, 8,000. That should make that 54,000. $107.35. So 8,800 from the 62,907, 541, 0735. And then we're going to label this line just like it has here in the book. Net increase during 2017. So our net increase was $54,107.35. So then our next line we're going to have our balance, our new balance. We're just going to show what our balance is. Balance, December 31st, 2017. So we're going to take our balance that we had on January 1st. So that was the money, that was the amount of retained earnings that were already banked. That money's already in the bank. At the beginning of the year, then we have our increase during the year, $54,000. Because what happened is we had our income, we paid out our dividends. So this is the amount of total income that's still left in the bank, net an additional amount that's from the year, $54,000. So we're going to add what we made during the year to what was already in the bank at the beginning of the year. I'm going to add those two together and write those over here in this third column. That's $100,706.83. So go ahead and draw a line underneath that. Pardon me? This one?
No, the one just here.
That?
Yeah.
I added these two together. Yeah, so if I didn't speak loud enough for anybody else to hear, so we had the balance on January 1st. That's money that was in the bank Then we had our income during the year after the federal taxes was paid. But also during the year the company paid out dividends to the stockholders. So that's money that went out. So we had to subtract the money that went out from the income. So the $54,000 was what was made with the cash left over from what was made just during 2017. So this is the income from 2017, the amount that's left in the bank. So we're going to add this amount with the amount that we had already in the bank at the beginning of the year. So this is what we had in the bank at the beginning of the year. This was the additional cash from the year. So we're going to add our additional cash to the cash that we already had. Add these two together for a total of $100,000. $100,706.83. So this should be the amount that's in the bank in the cash account now. So we just have our last line to add, our total stockholders' equity. So our total stockholders' equity is going to be the cash that's in the account plus the value of the stock shares. So we're going to add our stock shares to our cash in the account. So we just add these two together for $210,706.83. So our stock value plus cash in the account equals the total stockholders' equity. Any other questions?